Hey everyone, my name's Andy. My channel's Finding Value. If you like making a lot of money, if you want to be in the undervalued assets, if you want to be in front of the big moves, subscribe to this channel. I can show you how to be in front of the moves, not chasing things. I hate chasing things. I like to be positioned before the big moves come. This channel can help you prepare for those big moves. Today I'm going to talk about the oil sector. The oil sector is, I think, the underlying, it's basically the fundamental portion of wealth, energy that is. And the oil sector provides a lot of energy to the economy. It is the number one commodity used in the world in all sorts of different varying products. So oil is something that I think is worth taking a look into for investments. So this presentation goes into the oil sector. So let's jump into the oil sector, see what we've got. So the ultimate bull case is what I've got here. Why I think oil is going much higher irrespective of OPEC. We will demand more oil than what the earth has to give at some point in time. That will add more energy to society than what it takes to get it. We are drilling for oil in harder to get places. We are extracting it from sand. We are falling down the energy return cliff. And I'm going to show you what that energy return cliff is. So here it is. This is the net energy cliff. You can see this thing drastically coming down after some point. You can see that historic oil and gas fields are over here. This is the new oil and gas, conventional oil and gas over here. We've got wind, which this is high wind. The actual wind that we use is over here. Wind, coal, nuclear. We've got solar, photovoltaic. We've got shale oil, tar sands. And then we've got oil shale down here. So in order for the energy return on investment needed to support modern industrial societies, it needs to be roughly in this portion right here. This is like an 8-to-1. That's what this is here. This is the energy return on energy investment down here. This is the percent of energy given to society to do work. So it takes 1 or 2 barrels of oil over here, and we get 99, 98 back to do work with in society. When this goes down and down and down like this, it means that we take 50% of the oil or energy to get other energy, and only 50% is available to society. This is basically like running on a treadmill and just maintaining speed. You're not actually giving more energy to do work in society, to do things that people in society want to do. So you have to basically be at an 8-to-1. And solar photovoltaic is somewhere in this range. Maybe it's a little bit higher, maybe around nuclear right now. But the problem with solar photovoltaic and wind is there's no way to really store that energy. And they're very, the energy produced is kind of a sinusoidal, kind of on and off deal. And they only produce energy maybe about 20 or 30% of the time. Or less. That means the wind's not always blowing. It means that the sun's not always out, and they're very on-off. So you have to drastically increase the wind and solar 3 to 4 times as much as a steady output of natural gas or coal. So there's massive downsides, and it's very costly to store the energy in batteries and or hydrogen versus just having oil or natural gas there. It's very cheap for oil and natural gas. It's by far a superior product than solar and wind. And there could be other environmental impacts making as much wind and solar as they want to in terms of mining the minerals out of the ground. The growing gap of regular conventional oil, just to let you know, these are the discoveries, these gray. This is the future discoveries in yellow. And I know this is a little bit of an old chart, but it doesn't really matter. I think it still paints the correct picture, is that production is exceeding the discovery rate, which means that it's just a matter of time before we run out of oil. I mean, literally the production will hit a peak and then come back down because we're not discovering enough oil to replace the oil that we've been using of past discoveries. This is the US Hubbert model. The Hubbert model just says that we're going to peak at some point, the production, and then decline. We did hit a peak. We were declining. This is the shale oil over here. And remember that we're replacing, this is high energy return on an energy invested oil, and we're replacing it with lower and lower energy return. So this is the volume, but not necessarily the energy given back to society. So what people are mistaking here is that we took a lot more energy to get this oil here, but we did not get the same amount of energy as we did here, even though the volume flow rates are the same. So people are going to be focusing on flow rates, not necessarily free energy to society. This is the oil price. Again, if I chart this thing out, you draw a top trend line here and a bottom trend line here. We've got these nice kind of touching points here, and we've got 1 point, 2 point, 3 points there. I think this is that the price of oil, I think, is going to come back and hit the top of this trend line here. This is going to be way higher. It's off the screen, way up here, and I think it's going to eventually. We broke this downtrend line here of this pattern, pattern over time. We broke to the upside, and eventually this thing's going to moonshot over time. Maybe 2025, 2028, something like that. We'll end up in the multi-$100 per barrel range. It could be 300, it could be 400. I have no idea what it's going to be, what it's going to end up at. But we're going after harder and harder to get stuff. And if we have a green revolution, we have to mine all the minerals for all of these things. It is very difficult to get as much copper, silver, tin, lead, iron ore that they want to create these wind turbine engines, the solar panels, and the electric vehicles and batteries. We are going to go through a mining boom, which is going to blow through fossil fuels like we've never seen before. This is the gold to oil ratio. I'm just showing you that we're in this channel. Probably going to break to the downside for oil, which means that oil is going to outperform gold. That's my guess. Oil companies I own, my highly leveraged companies that I think that are going to return quite ridiculous amounts of returns are SM Energy, CDEV, which is Centennial Development. We've got Callon Petroleum here. This is Athabasca Oil, Birchcliff Energy, Crew Energy, and Grand Tierra Energy. Leverage, good leverage, which is with a small company without the debt, is Contango Oil and Gas. They don't hold nearly as much debt. So this one may not produce the same amount of returns as some of these highly leveraged companies. We've got some exploration companies, Trillion Energy, which is a new exploration company. And then we have Reconnaissance Africa. That's another one going after a very large oil find. At natural gas, I've got Southwestern Energy, Antero Resources, and CNX Energy. Those are the ones that I own. In energy services, I'm in TTI, DXPE, and RIG Transocean. This is DXP Enterprises, this is Tetra Technologies, and this is Transocean. I do have some other ones that I'm sure I have one or two other ones that I can't think of off the top of my head since I didn't go into my account. But oil is a great investment. Energy is the underlying form of wealth. You either have to extract a natural resource or you have to convert a natural resource into a product, which all takes energy. Energy is the ultimate form of wealth because that is what allows people to do work. The more energy you have in society, the more work that society can do. Watch out. If we see peak oil, you better watch out because anything that's above ground is going to fetch a major premium. Currencies will fail because currencies are all predicated off of growth. Currency is a unit of debt. That's what a note is. And a note or debt is a future repayment. A future repayment means that you're going to pay something in a natural resource or a usable product to that person or that country. So that requires energy. And if your energy sources get scarcer and they go way up, that means that people are going to start to question future growth and valuations of all the companies on the stock market, of all the paper dollars that are in circulation, because those are all predicated off of a growing future. That's how you pay it back in larger sums because all money is loaned into existence at an interest rate. Those do not function if you don't have an increasing energy source. I don't know if you guys know that, but it's quite interesting when you dig down deep into the energy backing the currency systems. If you guys like this content, give me a thumbs up, leave comments below. And if you haven't subscribed, I don't know what you're waiting for, subscribe to the channel. Thanks for listening. This is Finding Value.